Did you know that some of the richest individuals in the world pay a lower percentage of taxes than you and me? Hey guys, it's Beal here, and today we're going to look at a topic that could change your financial game forever. The idea here is not just for the super rich, but for all of us to learn how to optimize our finances legally and ethically. First of all, if you can subscribe and like the video, it will only take a few seconds and it will make a huge difference to me. Let's start. Number 1. Tax planning. Tax planning is essential for optimizing personal and business finances. Engage legal strategies to minimize the tax burden, taking advantage of tax laws. To do this, it is crucial to understand your country's tax system, which can be complex and varied from region to region. Tax planning does not involve tax evasion. Focus on legal and ethical strategies such as tax deductions and smart investments. To apply these strategies, you need solid financial education. Understand concepts such as budget, investment, and interest. Additionally, familiarize yourself with taxes specific to your area, including tax rates and filing deadlines. Remember that as tax laws change, new opportunities emerge over time. Stay up to date with the latest tax trends and regulations. Another advanced strategy is the use of companies and holdings. This involves creating legal entities, such as corporations or LLCs, to manage financial and business investments. When done legally and ethically, this can provide significant tax advantages. One of the main reasons to create a business is to separate personal assets from business assets, which can protect personal assets in the event of litigation or bankruptcy. In addition, creating a company allows you to enjoy various tax deductions and benefits, including deductions for business expenses, asset depreciation, employee benefits, and international financial transactions. It is essential to highlight that the creation of companies must be legal and ethical. Tax evasion or misuse of business structures are illegal practices with serious legal consequences. Consult a professional to ensure compliance with tax laws. Let's go to point 3, long-term capital gains. A beneficial tax planning strategy for wealthy people is to pursue long-term capital gains. Capital gains occur when you sell an asset for a price greater than its original cost. In many tax systems, the tax rate on long-term capital gains is lower than that on short-term gains. This encourages long-term investments. The key is to choose solid investments and hold them for a substantial period, reducing the tax rate and allowing for consistent growth. But remember to balance this strategy with liquidity and diversification needs. Additionally, tax laws vary between countries and jurisdictions, so know the rules where you invest. Real estate investment trusts, REITs, are popular investment vehicles that focus on real estate assets, such as commercial real estate, residential real estate, hotels, and related properties. REITs are known for providing a number of tax benefits for investors and are a tax planning strategy used by many wealthy people. One of the most attractive features is that they are required by law to distribute the majority of their taxable income to shareholders in the form of dividends. As a result, they do not pay corporate income taxes, which can result in higher returns for investors. Dividends distributed by REITs are generally taxed at dividend tax rates, which are often lower than ordinary income tax rates. This can result in a lighter tax burden for long-term investors. They may also allow investors to take advantage of depreciation deductions related to real estate assets held by the fund. These deductions can reduce investors' taxable income. Through REITs, investors can access large-scale properties, such as high-value office buildings and real estate developments that may be beyond the reach of individual investors. Additionally, specific tax benefits may vary from one REIT to another and depending on local tax regulations. As with all investment strategies, it is critical to perform careful analysis and consider your personal financial goals before investing in REITs. Using foreign tax credits is an effective strategy for legally and ethically reducing global tax liabilities. This strategy avoids double taxation on the same income in your country of residence and the country where the earnings were generated, using international tax treaty agreements. The main advantage of foreign tax credits is the reduction of the overall tax burden. If you pay taxes abroad, you can use those paid taxes as credits or deductions on your tax return in your country of residence. Now, here's a tip that I'm sure you don't know. Investing in renewable energy, such as solar, wind, and other clean sources, is a beneficial practice for both the environment and investors. Many governments encourage these investments through tax incentives such as tax credits and deductions. For example, in the United States, taxpayers who install solar energy systems on their homes may qualify for the federal home solar tax credit, which can offset a significant portion of the installation costs. Additionally, companies that invest in renewable energy can also benefit from tax incentives, including tax credits and capital expenditure deductions. Many governments also offer direct subsidy programs for renewable energy projects, such as installing solar panels and wind turbines. In addition to tax benefits, investing in renewable energy can result in significant long-term savings on energy costs and contribute to the reduction of carbon emissions, promoting a more sustainable future. The last and perhaps the most valuable tip in this video is the importance of always looking for financial knowledge. The world of finance and taxes is constantly evolving. No one is born with all the knowledge in the world, and it is necessary to acquire financial wisdom over time. Remember that financial education is not a destination, but an ongoing journey. As you learn more about tax planning, investing, and financial strategies, you will be in a better position to make informed and effective decisions for your unique financial situation. To help you, in the description of this video, there is a link that takes you to a set of financial books that everyone should read. These books provide valuable insights into how to increase your financial proficiency, better understand the tax system, and learn from the strategies that wealthy people use to optimize their finances. Remember that financial education is an investment in yourself, and the knowledge you gain can result in significant savings over time. If this video helped you, click a like button and subscribe. Until next time, good investments.